Good morning and welcome to the 5 with Fitz. I'm, of course, Keith Fitz-Gerald. Thank you for spending a few minutes of your time with me today. Fall is finally here in the Pacific Northwest and it's fabulous, but with it comes the volatility that I was concerned about last week, and it may have reared its head, at least in the early going this morning as I record this. Now, the path of least resistance remains higher, and for all the reasons I laid out in last Sunday night's short video, which you can watch elsewhere on the channel, I think it'll be the big caps that take the lead again fairly quickly. Now, to that end, the super savvy Stuart Varney also asked me about that issue this morning, as well as Apple, ahead of today's opening bell, and I hope you find my POV helpful. That video is also available elsewhere on my channel. Anyway, please do watch it because I think we're in for some exciting times. It's a great time to be an investor. But it's what he asked next that matters most, and where I want to start today. Many investors are scared out of their minds at the moment, and with $7 trillion on the sidelines, a lot of them are wondering what's wrong with keeping that money in money market funds if retirees don't want to take the risk. In short, nothing. If they and you and me and we understand the trade-off. You see, over-allocating to safe investments is one of the riskiest choices of all. Let me explain what I mean by that. Here are 5 big things to think about right now, today, if you're tempted to be one of them and stay out of the fray because you perceive it safer. Number 1, longevity risk. Now, the average 70-year-old has a 1 in 5 chance of living to be 95 and a 1 in 10 chance of living to be 100. That means your portfolio may need to last another 30 years or even more. My point is that a money market may feel good, but 4% simply isn't going to cut the mustard or keep up with your lifestyle needs, living expenses, and medical inflation. Simple as that. Number 2, let's talk about inflation risk. A lot of people are breathing easier with inflation coming down, but that's a mistake. Just 3% inflation can cut your purchasing power in half in 24 years or less. And remember, we're talking about potentially a 30-year time horizon. Most investors do not understand how this works against them. Respectfully, I submit that inflation is far more dangerous than the market volatility you're worried about. The markets have a very defined upward bias over time, and that works in your favor. But, to something you hear me say a lot, only if you're in to win. Take a look at the image that's in the email version of today's 5 with Fitz. I mean, a good, hard look at that image. Yeah, you'll have ups and downs, but over time, innovation has never failed to produce profits over time. And that's what you want to focus on. Number 3, spending isn't just about living, right? You and I work hard for our money, and it's logical to think that we've earned it when it comes to spending. But here's the challenge. Retirees and those who are about to retire tend to be more frugal, but still spend regularly, which means that a portion of the portfolio locked into low returns will deplete faster than one that has a growth component all the way to sunset. Now, you don't need to go crazy or do anything stupid, mind you. That's not what I'm suggesting. Even a tiny amount invested in growth can radically change your experience, your outcome, and your longevity when it comes to money. People tell me they don't have time frequently, and I understand that. But think about this. Just $1,000 invested in Palantir a year ago would be worth $4,851.60 today. Or IonQ 12 months ago, yeah, $8,530 today. Heck, even the popular SPY, a choice that many passive investors make because they want to parallel the S&P 500 index fund, that thing is $1,181.80 today. But the same $1,000 invested in a money market at 4% would be worth $1,040. Yeah, exactly. History suggests, by the way, that there are 10 to 15 Palantirs and IonQs out there right now. And my point is that investing even a tiny amount in them can make a huge difference over time. And your job as an investor is to find them and to latch on. And my job, frankly, is to help you do that if I can. Number 4 today, security and opportunity are not mutually exclusive like a lot of people think. Many retirees believe they're protecting their wealth by being cautious, but what they're really doing is trying to protect short-term comfort at the expense of long-term solvency. In other words, they feel great that they're sidestepping perceived risk, but what they're not understanding is the opportunity cost associated with doing that. I mean, let's be frank. You're not alone if you're feeling this way right now. Not by a long shot. But every dollar parked in cash is a dollar that is not compounding and not growing. And again, my point is this: even modest growth over a 10, 15, or 20-year period can mean the difference between living the life of your dreams and scraping by. Put another way, the choice isn't the visible risk you perceive today, but the invisible cost of opportunity of tomorrow, because the pain of temporary drawdowns today will pale in comparison to the pain of outliving your money. I've seen it thousands of times over the years. It is no more dangerous. You just can't do that. And number 5, you can do both, right? Wall Street has sold investors a bill of goods for decades. It is not an either or choice. You can still have plenty of safety for near-term cash needs while keeping a carefully planned growth sleeve, income, and the like invested for the long term. This isn't either or. You can do both. There are all kinds of ways to handle this. Dividends, growth stocks with dividends, covered calls, more, all of which can create income streams while helping mitigate the fear of a downturn. The real risk couldn't be realer, if that makes sense, right? It's not volatility like many people think, but waking up at 85 and realizing you haven't got enough money for the next 15 years. The way I don't see it, you don't just need your money now. Investing done properly is about now, later, and much, much later. Now, let me point out what I'm talking about. When I first began my career, it was commonplace to plan for a life expectancy of 85. Now, I think 95 is absolutely appropriate and maybe even a little conservative, which gives a lot of folks pause. What's more, you can't let up like you'd think, even though that's accepted as dogma and taught as gospel to legions of financial planners. We live in a world where technology is changing exponentially, and that means investing differently with an eye on what the world will look like, not the one we knew. Now, again, I know that sounds scary, but it's not when you really think about it. The very same technology that is advancing so fast will eliminate many of the costs that presently concern us. You don't buy cassettes anymore, do you? I mean, maybe you do, but you probably don't. 8 tracks, same thing. Imagine what happens when AI helps solve Parkinson's, dementia, cancer, and all sorts of other diseases. Suddenly, end-of-life costs decline by an order of magnitude or potentially more. And that in turn means the quality of life goes up even as costs decrease. I can, for example, easily envision healthcare costs finally coming down out of the nosebleed territory, for instance. And I expect, not for nothing, Apple to play a key role in making that happen. Here's an example that'll hit home. Take your smartphone, right? If you were to buy everything needed for the GPS it has on board in the 1980s, the GPS system would have set you back 150 grand, and an accelerometer that's in your phone right now would have weighed 50 pounds. The technology that all made it work set you back $1 million or more. Now you can get all of those things better, faster, and more accurately for just about a couple bucks. And depending on your network provider, you might even get your phone for free as part of whatever connection package you have. The phone and the goodies will fit in your pocket. By the way, if you have found today's 5 with Fitz helpful, and you might enjoy one bar ahead, just like other like-minded investors who tell me it's changed their life. So if you're covered, fabulous. That's not my point. I'm not here to sell you anything. But today's bottom line couldn't be more critical or more important given what we're talking about. Fear is a powerful anti-motivator, yet it is also one of the single biggest and most compelling investment opportunities if you can overcome it. So as always, let's try to do that. Let's make it a great day and start the week strong. You got this, I promise, and I look forward to seeing you tomorrow. Thanks for watching.